Hey guys, we're gonna get started here soon, about 5 minutes or so. Still getting people into the other live chat and live stream outside of YouTube here. And it's gonna take a few minutes to get that set up, so I should be started around 11:45, so at the time stated in the tweet or post. I don't know what to call them anymore. Let me know if the music's too loud or if the microphone sounds okay in this stream for YouTube. I do have it balanced for the other stream over here. And I'll be back on the microphone in just a moment. All right, we're gonna go ahead and get the music under control here and get ready to get this rolling. All right, you guys over there on YouTube, all right? Sounds good. Okay. And the other stream over here, the non-YouTube stream, how you guys doing? Can you hear okay? Excellent, excellent. So we're going to get started here in just a moment. Yeah, just making sure the microphone isn't too hot. Yeah, the music is, I did turn the music down, yes. It's actually off. Hello over in YouTube land. We've got Ivan Spin, No Name Bobby, Dr. Pepper. Hello. I haven't seen you in a while. Got Jedi. All right. I'm hearing sounds good and a little bit quiet on the YouTube side. I mean, as long as you can hear me okay and it's not, so quiet that you can't make out what I'm saying. I'm seeing on the other stream. Yeah, we're doing a little bit different today. The Parsec stream or share. Yeah, we're not doing that today. Yep. We're doing things a little different on the other side over here. Okay, looks like, yeah, Jedi, I don't know what kind of, if you're using headphones or your speakers. Let me see on my side. I can check. Give me a second. You might hear a little bit of feedback. Give me just a second here. Parsec stream or share. Okay. Yeah, it does. It on my side, the audio does come through pretty clear for you guys on YouTube. But let me know if you're still having problems, Jedi. And we're going to get started here. We're about a minute past when I wanted to start here. Today's going to be kind of quick. Well, relatively quick for me. It's still going to be a full stream. We're going to cover all the bases here with Bitcoin, traditional markets, Dixie. We might even take a look at, gold, and then we might even take a look at bonds as we come into the Friday rolling period for some of them. And we'll go get this rolling here. Okay, you guys over in the other stream are okay? There's questions. Go ahead and give your questions to Jimmy. I know that your guys are sitting in the conference room over there. And then have him just put them in the chat for me. Okay. Let's get over here and get this stream rolling. Yeah, my S's and P's are going to be a little hot today. My apologies. I had to redo some technical stuff here with the audio setup again. Yeah, this time it wasn't a Windows update. This time it was a software update for one of my mixers. So all right, so let's jump in. Let's make sure I'm actually on the right screen. Okay, it's all good, Jedi. Just let me know if you can actually hear. That's all. If you can't hear, then that's a problem that I would probably have you investigate locally. But as long as you can hear, that's fine. And it does sound like you're just getting mixed results in terms of quietness or loudness on your end. Okay. All right, so we're going to jump right into this, and I'll do my intro that I have not prepared. So this is going to be winging it. Hello and welcome to Landy's Crypto Corner. It's a Friday Bitcoin live stream. So we are going to take a look at Bitcoin, do some TA on the longer term timeframes and weave that into our daily analysis. We'll also be taking a look at traditional markets. We'll take a look at Dixie, gold, and maybe even look at bonds today. But we're going to jump right in with Bitcoin here. On the daily, we're going to flip over to what is typically my Bitcoin in 60 seconds chart for you guys. If you don't know and you're new here, I do a Bitcoin in 60 seconds video every day. It does show up in the shorts feed. So if you don't see it in your shorts feed, you can just visit the channel at CryptoLandy, and you can go ahead and click on the shorts tab, and you'll see that there's a video every day with updated price targets after the close of day. So that, if you're in the United States, typically, like yesterday's was uploaded on the 10th, but its price targets for the 11th because it is the 10th candle has closed, and those price targets are going to be valid for the new day's candle, which typically closes at 8 p.m. Eastern, 5 p.m. Pacific. This is that chart. You can see that Bitcoin has, yesterday's candle did hold the daily support, excuse me, at 29.4. In today's candle, did test the top side of that support resistance area and rejected, and is now trading below the support here at around 29,400 and $17. That's where this low is coming in from the range up here. Now, this does, from a candlestick perspective, paint the picture that, downside likely back to the low side structure here around 29K to the wick low area at the daily support at 28.4 to 6 or so, where you got this wick low and this wick low here, is in the cards if we do see a closure that loses the Tuesday, August 8th candle open at around 29,180 to that wick here at right around 29,100. So basically 29K is the area to hold. And if it does lose that, then I would be looking around the daily support area at the wick low of the current move at around that 28.4 to the wick low of this little attempt to break back into the range above here, which is coming in at around 28.6, slightly above there. Now, when we look at Bollinger Bands, we can see that this does line up with the lower first as well. So the lower first coming in right around that 29 to 29,100. If it's lost, I would expect a run of the lows again around that lower second, which is at 28.8. That's this wick low of the breakdown from the prior range. If that area is lost, then I'd be looking at that daily support at 28.4 to 5. And if we do see closures in there and below the lower second standard deviation, then I would be looking for a move down somewhere around that weekly support at 28K. If that area does not hold up, just like every single week since, we've been talking about the daily supports directly below at around 27.5 to 27.250, and there is weekly support below there as well at 26.750, and there is dailies above there at around 27K. Now, if Bitcoin can take out the upper first standard deviation on a close, that would be around 29.6 currently. Really, it's probably going to be around the this wick low over here at 29.5 at close of day today. If Bitcoin does close around the basis band, we're going to see further compression of the bands. So above there, I'd be looking for it to test this little structure right here around 29.7 to 30K. Likely an initial first pass rejection, but if it can start closing above the upper first and upper second, then I would be targeting the weekly overhead at 30,300 to the wicks just above at 30,400. And if that area can be reclaimed, then we start looking in the strong half of the range above at around 30,500 to 800 around the close opens here. And then the wicks at around 31 to 31.5 all through this area. That 31.5 wick did get closed above. That was on the 13th of July candle that went up and actually tested that big overhead resistance at 31.8. So this whole area would be fair game. Just take it in order: 30,500 to 800, 31K, 31.5, and then that overhead resistance. I don't think it would just be a straight shot up, but if we did start seeing closures above this upper second standard deviation on the daily, that would be expansion to the upside. If it did not reverse, it still has to break through that weekly overhead resistance and not just swing the wicks above it. And that would be your 30,300 to 400 area. Bitcoin really hasn't done too much. There was a lot being made today of, the ARK ETF. It was unlikely that it was going to get approved or rejected. In fact, especially after seeing that, the SEC just wanted to kind of work with BlackRock on, a revision of some of the criteria within their ETF filing. I'm assuming that's going to be the same for ARK. So it's just a delay. No big deal. If they had accepted it, probably would have seen a pretty big upside move. And if they had rejected it, probably a pretty big downside move. But I wasn't really expecting a acceptance or rejection of their ETF filing today. It's a little bit too early. There's a lot of moving parts still going on here. There is going to be some more information and more filings that are due for response from the SEC pretty soon. I will try to get that out to you guys when I have it available to me. So all right. Now the daily stoke momentum. After going over kind of the Bollinger Band setup, the support and resistance setup, let's look at momentum. Below 29K, go figure. That's below the lower first standard deviation of the Bollinger Bands. That would turn momentum to the downside. And, the longer that Bitcoin just kind of hangs out and doesn't do much, we're likely to see this turn if it does not start choosing to take out that upside upper first standard deviation. So, I would watch the momentum pivot over the weekend, as it might be an early indication that we see a possible move to the downside or continuation to the upside. And it's not, it's so close to price action, and it's probably going to be right on top of price action at close today, that I would just keep a close eye on it in relation to the 2-day, and we'll get to the 2-day in just a moment. But I wanted to call this out. There is a likely bearish divergence confirming at the end of today, which, it's kind of already played out, this bear div, and this is coming from the 23rd's candle, so July 23rd. That is this high that broke down from the range. So, initially the take on this would be that it just kind of keeps things below the range. We've kind of already seen this play out, but if it is going to be a continuation, it's likely going to head down to the bottom side of this consolidation range that we're looking at, 29K down to 28, 4 to 6, possibly 28K. You can see the signal line here is coming in at 334, sorry, or 29,234, my apologies, which, I do believe Bitcoin tapped on today, so it's already been in and around the signal line. The bearish control zone is down here at 28,250. Now that is, right in that support down there, just above the weekly. That would be fair game to go test that weekly if it did. Now the midline of RSI here is around 29,475, basically 29,500. So if we did see RSI move up, we're looking at that overhead resistance again. I would say that the majority of this move, or the easy part of this move, has already played out. It would just be the continuation back to the lows of this range and possibly into that weekly down below if it does confirm below the moving average and not just swing it. But this is not the setup that bulls want to see, that's for sure. So bears will want to pay attention to this if they're shorting the rejection at the overhead resistance in today's candle, which is this daily support resistance zone 29.4 to 5. So now I would say when looking at the 2-day here, this is lining up for this is basically already a confirmed rejection at the basis on the 2-day. Come back to the lower first. If it does lose the lower first at 29.185, then of course I'm looking right to the lower second, which is also coming in around this basis on the weekly. So the bars here, or the horizontals, are representation of where the Bollinger Bands are on a weekly. Thank you, JRTA, for making this. This will be, I know I said this last stream, this will be integrated into the Landy Bands indicator very soon. Just need to find an elegant way to do so. But we can see that that's lining up with the lower second standard deviation here on the 2-day chart. And that's coming in around that 28.4 to 5. So break below and close below that 28.180, 28.2 area, 29.180 to 29.2 rather, sorry. Then, we're looking back to the 2-day low side structure around 29K, and then below there, the lower second standard deviation of the Bollinger Bands, which lines up with the weekly basis, and right around that 28.4 to 5 at the lows. So lose that area, it's likely that things head down to the 200 EMA area on the 2-day chart, which lines up with the lower first on the weekly, and that's around 27K. So 27 to 27,250, the same areas that we were just talking about on the Bitcoin in 60 seconds support resistance chart down here, 27.5, 27,250, and then just below there's weekly support at 26,750 to basically 27K, which you can now see on the 2-day there. And this is still going to be headed up on any closures for momentum here. Any closures above 28.8 basically. So above 28.8, it's good. I still would say breakdowns below 29K and closures below there, probably going to be swinging around this pivot. So it would be very, I would be very conscious of where this is coming into close on the Saturday candle. So this will close before the weekly. When looking at the 3-day now, we can see that we've got a lot of confluence for all the areas that we've been talking about. 3-day is going to close. Well, this just opened, and you can see that the bands are very quickly squeezing together. Very low volatility, 0%. The SMA is at 0%. So this is looking for a move very soon. The 200s have crossed. The 200 EMA is now over the SMA, right at the lower second standard deviation of the 3-day chart here. And that is coming in at around 27,800. So we've kind of got the SMA 200 and the EMA 200 here right in that area above the daily support at that 27.5. And you can take a range there. There's a lot of traffic in that area, so you could probably pick out some dailies or higher term timeframes that are going to be in that area. Specifically this 3-day high right here on a close is coming in right at that 27.7 area. So we've got a 3-day support structure there. We have major moving averages and a lower second standard deviation. That would be the likely target if the lower first and the weekly basis are lost at that 28.4 to 6 area. And if things, might end up heading down to that weekly support at 28K, and they can wick right into the lower second and some of these major areas on the 3-day time frame. I wouldn't necessarily be looking for this to just bomb out to some of the really nasty downside structures, I'd want to see the weekly basically where that's at, because just below here we have the lower third, just below the lower first standard deviation of the weekly. So the 3-day lower third's coming in at that 26,800. That's at weekly 26,750 or so. So there's weekly support there, and there is an order block candle right here on the 3-day. And we've got the lower first and lower third. Typically, you're not going to see initial moves through the lower second and lower third on a 3-day time frame. And if you do, well, then it's probably going to take its even if it bounces, it will probably take its time, but end up down by this last low side structure around that 25, 25 to 25.3, and then the wicks down there at 24.750 or so. And we've talked about this, and we will see this come up again when we look at something like the 5-day. 5-day, weekly, and basis are right on top of each other, so we're seeing essentially the same setup. And the 5 days pretty easy to read. The basis for the 5 days coming in at 28,532. The weekly is there at 28,628. Below there, I would expect to test down to the 200 on the 5-day and lower first area of the weekly. And the 5-day chart here. So we've got 3 major areas here. If it did break down from the basis at that 28,426, the 200 EMA on the 5 days coming in at around 27,500. That's that daily support area that we talked about. Just below it, the lower first, we've got here at 26,880. Just below that lower first on the weekly at that 26, we'll call it, it's 184, we'll call it 27 rather, 184 to 27,200. So 26,8 to 27,2. Again, so close to that weekly high at around, the weekly low side structure at 26,750. And the 5-day low structure is below the lower first. If we did see closures below there at that 26.8, 26,750, then I would be looking for this to run back to the actual last major low, which is coming in at the lower second at around that 25.3. It's actually 25,230. Lower second here is that 25,750 area. So these wicks over here when you're looking at a 5-day chart. And then here's the weekly setup. Lower second standard deviation coming right in here, just above the 200 EMA on the weekly, which is 25.5. Just above the wick low there, about $750 above, where we see the 200 EMA and the lower second standard deviation. Now I do want to note that the weekly's 200 SMA is just above the lower first here, coming in that 27,300 area, 27,400 area. Again, right around a daily support level. So there is a lot of support beneath price. So if price does start to break down, I would expect it to run those supports in the orders that we've talked about, likely lower term time frames, even not dime frames, but time frames. And then we come back to it later and see if there's any structural changes on the daily. And then pretty easy to the upside, regain the range above. $30,000 is really going to be the area that needs to be closed above. This wick high, take out this close open right here at 30,000, we'll call it 100 on a close. That is by the upper first on both the weekly and the upper third on the daily. Need to see closures there and then start turning this daily structure around. I do not think that it would just green candle its way through. That doesn't mean it wouldn't, but I would be looking for first pass rejections and then just take it in order above the upper first at around 29,600. That would put it above the daily overhead resistance at 29,425. And then it can at least test around the $30,000 area at the upper second and try to make an attempt to take this area back. If the bulls can recover that, they just got to get above the wick highs at around 30,350, which puts it at around that 30,300, 30,350 weekly that we have discussed many times over here on the Bitcoin in 60 seconds chart. So that's this guy right here. Reclaim that, and it's a run right back to the highs, basically. I don't think it would be immediate, but I will jump right back to the 3-day chart for just a moment, not on here, but on here, and show you that BBWP, or volatility, is at the lowest level that it has been at since back here in December into January of this year. So December of last year into January of last year. So this is where we saw the move really get rolling. We had the last 3 days before that was this low was the breakdown to new lows, and then we have the move off of the lows that really has defined this entire move up. So this is going to be important to watch on the 3-day. Keep an eye on that volatility expansion, and note where the reversal zones are. That lower second is right around major moving averages and a high side structure on the 3-day. So that would be a logical reversal zone. And, you know, in and around the low side structures here, or the highs over here that coincide with the lows over here at the $25,000 area. If we see price getting there, it's likely going to get picked up. That doesn't mean it will, but that's something that you should pay attention to. If things do head down, lower second and third, likely reversal zones. If we saw further expansion past, then we're looking to the confluent zones where support and resistance line up. This would be your breakout off of this last low, right around that lower third at 26K. And then below there, we've got the $25,000 region, which was a retest of the breakout from the lows. So that's what I'd be looking for. And then if we do see a move to the upside here, especially above the upper second standard deviation on the 3-day, that would also be the upper second standard deviation on the weekly chart. I mean, we're talking 31.5 to 31.8 area. We start seeing a reclaim of that. We're probably going to see some sustained upside and aggressive sustained upside. And we'll see what that coincides with on the news side of things, but we'll see it first before the news actually picks up what's going on in the markets. We'll see it on our charts. So over the next few 3-day closures, which we've got, this will close Friday. The Friday candle will be Saturday, Sunday. So it's going to close with the Sunday candle. And we'll see the 2-day close with the Saturday candle, right? And then the 3-day close with the Sunday candle. That is going to be something to watch over the weekend. And, we'll see if we do have a bit of an OI buildup on this particular move here. So if we go to, we can use a crypto quant chart as well. Go ahead and full screen this. And we can see that OI has continued to make higher highs. Price has been making lower lows. So that is something to watch. If it is going to, move down, flush some people out, you want to see a strong bounce off the areas that I was talking about to the downside, and then watch it move on. And if we see OI, of course, increasing with a move to the upside, just be aware of initial first pass rejections that completely wipe out all of the fresh longs. So that is something to keep an eye on when it comes to OI. And let's just make sure that we're seeing around the same numbers here. Let's go to the 1-day chart. Okay. That is not, we're gonna have to do it there, right? Yeah. Okay, so I guess it's not that abnormal for this particular range. We've seen the OI kind of head up to around 11.25 billion, and on the low side around 9.14 billion. Now, that is confluent with this downtrending structure on the daily that broke out to new highs. I mean, we're I'll be honest, that what we're painting now does look like the structure prior to it. So we're talking the highs that were put in, the high that was put in April, and then the drawdown. We're seeing a very similar structure there, and it wouldn't surprise me to see a sharp move down. We could be seeing a little bit of a repeat pattern where we then see another leg. Now, you're going to get a lot of arguments that this is a 5-wave structure up and it's due for an ABC correction. ABCs can turn into flat corrections. They can also defy your wave count. So I would go with the volatility aspect of things to gauge direction here at support and resistance. So above the upper second, that'd be breaking through overhead resistance. And then on the daily, and likely getting continuation to the upside. So closures above the upper second, even the upper third, would go right into that overhead resistance, but any kind of breaks through there are going to, get continuation to the upside. And then we have supports here of this current consolidation. Break down from there, we're likely going to go to the next support in order. Just take it in order. And it will most likely accelerate, by the way, because low BBWP on the daily as well. Low BBWP on the 2-day. We're getting close to a larger move, guys. So daily's already kind of showing the etchings of that, but we saw the expansion on the move down and reversal off the lower second. It's chilling around the basis band, which means that it's neutral. It's neutral, and neutral is the best way to wreck both bulls and bears before the real move gets rolling. So be very, very careful. Know your levels, know your support and resistance zones. Ask questions on Twitter in relation to the charts that I post if you are not clear about why I'm interested in a certain zone, or go back and watch the early part of the stream so you have a good idea of why I'm looking in those zones and the confluent zones with them. So that's going to do it for Bitcoin today. Let's go ahead and jump on over to we're going to jump on over to traditional markets and see how they're looking heading into close. So we've got Dow bouncing around in that support resistance zone, the top side resistance, and finding the bottom side of that zone as support currently. Now the daily is trying to recover that basis band. Now it came right back to the lower first standard deviation, much as we had discussed inside of the support zone. It can very easily still go lower and be perfectly fine all the way down to the lower second standard deviation. Now you don't want to see it hanging out in the weak half of the bands. Why? Mainly because on any bounces, it's likely to result in lower highs the further it goes down. But where it's hanging out right now, above the lower first, when after a nice strong impulse like this, coming down to the lower first or even the lower second and then reversing and taking out some of its local high structure is not abnormal at all. And let's see if momentum agrees with me. Not quite yet. 35,357 would turn that back to the upside, and it's trading at 35,275. So this will be worth watching coming into the Monday open, because that will adjust down. And this stoke is a bit different for those of you that haven't seen it before. For those of you that have, please bear with me. This is a fancy paid indicator. This is the KVDB Advanced Stochastic Oscillator from app.crowntrading.net. I do not have any affiliation with them, financial or otherwise. If you did want to get this, you can go over there and see what kind of specials they have. But this has a pivot. I enjoy this particular indicator because it has a lot of extra bells and whistles, but you can get a free one. This is the BA reverse Stoke panel. You can search for it. It is free, and it also has a momentum pivot in there. So Dow, right in a key area, not unexpected to see this consolidate here. If we did see it break down below, it's likely going to be below the lower first. It's going to head down to the lower second, and that would be around 34,800 or so. Maybe a little bit above that, but it's still above the highs that it just broke out from. So no big deal until it starts reclaiming these highs, at least the last higher high bearishly. And that's going to be all the way down at 34,500. So keep an eye on that coming into the close opens here. And in fact, 34,765 on the daily. Let's go over here and let's use, because I have everything set up on this chart. Let's go ahead and look at Dow on this set of charts because it has the weekly. If you look here on the daily, the weekly upper first standard deviation, which is going to really govern the strong trend on the weekly to the upside here, is right around 34,765, and the lower second here on the daily is coming in at around that 34,800. That'd be a logical area to look for this to head back to next week if it does choose the downside. But closing above the basis here at 35, what is it, 264 on the on Dow. I would be looking somewhere around the upper first on the daily, which is the upper second on the weekly, at around 35, 450 to 35.5. So, and then right back and retesting the highs above there at around that 35, 600 or so and above. Could even run all the way to the upper second. Take it one step at a time. We do see BBWP is cooling down, and it is coming off of very low levels. So regaining that basis, at least short-term upside, and then come back to it later. Let's go ahead and take a look at NASDAQ. So NASDAQ still heading down. It is throwing a doji at the lower second standard deviation of the daily chart here. And it did take out the areas that we talked about at this consolidation. So last we looked at it, I believe I was looking at this low side structure. It did swing around it in that $15,000 area. And I think I said 3,500 and like all these other things for Dow. It's 35,000 for Dow. My apologies. 15,000 was kind of the target area to the wick low around the just above the support here at 14,900 to 925 or so. It did hit that area on the lower second. If it, this is a pretty easy setup. If we do see Monday get below the wick low of today's doji, which is coming in at 14,973, then it's likely going to head down to that 14,900 area, swing this low, and if it breaks into it, we're looking somewhere in the 14,700 to 800 zone. If it takes out today's high at around 15,100, then I'd be looking somewhere around the upper first, which would also be the upper first on the weekly area, roughly around 15,200 to 250. So that's kind of my next targets, and we'll follow up on Monday anyway and see how it's trading, as we're going to do a Friday Monday, so we'll get a good idea of direction for NASDAQ. And it's not going to take much to turn this stoke up on the daily, and that's coming in at 15,021, and it is trading slightly above there. So we might see an initial cross coming into Monday's open. Just keep a close eye on it coming in. We might even check back on this if I'm still streaming here. See where it closes at, but looks like it wants to possibly set up for a reversal, as does SPY off of this lower second, which is also the upper first on the weekly. Also hit one of our main areas. It hit the high over here that we talked about, and that was the high at around 440 to 445. And what was the low at? 443. So split the difference. That's a nice call there by the bands and the logical support and resistance areas. Also a bit of a gap fill over here. If it can close above that upper first, same kind of deal. If it loses the lower second on Monday at 444, I'd look for it to keep digging into this area, maybe even to this next gap fill where we see a close open coming in at around that 438 to 440. If it can reverse here, though, and take out today's high, lower first is coming in at 448 to 450, and then I'd raise my targets to around the basis at 450 to 453 at that overhead resistance, with a final target for me before reevaluating if it can get above there at around 455. you know, that's a lot for a Monday projection anyway. But I would imagine this probably looks like NASDAQ, and it does, trying to turn Stoke to the upside. 444 is the number to beat to get an initial cross to the upside here, and that's it's 445.90, 446 area right now. See what it closes at. 440, 443 is going to be the number to beat to turn that to the upside coming into the Monday open. So at least looking a bit bouncy on traditional markets coming into Monday. You know, let's go ahead and take a look at Dixie. Dixie's showing some strength here. Put in a higher low. Look at that. This will confirm a higher low if it can beat out these wicks today. Otherwise, it's going to look a little bit like a failure. But 102.84. Target's going to be around the 200s to the upper second here initially. And then the overhead resistance, because we have 200 EMA, SMA, and the upper second all around that weekly upper first standard deviation, roughly 103.13. We'll call it 103 to the overhead resistance here at 103.50. So nice buy off of that 102 support area. Had already previously reversed off of that area with an inverted hammer and then headed up. It's above the weekly basis band as well, above the upper first. I'd be looking for the next logical area to be that 103 to 103.50 zone. If it does break out above, it's likely going to try to head for the next area here at 104 on the low side of the high structure that was put in here at 104. The closing structure, well, the closing, it would actually be the open, is coming in at 104.30 with the wicks coming in at 104.69. Nice. So that would be the next big area that I'd look for it to run to if it can get above 103.50. Now, when looking at momentum, just kind of doing the overbought dance in the overbought zone here. 102.42 is going to keep that turn to the upside at close today. And 102.88 looking good to test up further unless it gets a harsh rejection before close. Is it still in a bearish structure? Absolutely. Still a big downtrending structure. Nice higher low in the daily. We'll see where it leads going forward. Yeah, and then lower volatility. I would say that this upper second to that overhead resistance likely a very dicey area for people bullish on Dixie. And you know, we'll see how it holds up. Yeah, and then the next area on the 2-day, absolutely. The 200 lining up with the upper second standard deviation, which would most likely update to around that upper second on the weekly here at these highs around that 104 to 104.69. Nice. It's still got to close above the upper first anyway on the 2-day to actually get that. We'll see if it does that today. We're not going to be live for that. That's closing in 3 hours and 31 minutes. Let's go ahead and jump on over to gold. Let's take a look at gold. 1912. Did it run my areas to the downside yet? Almost. But it's trying to put in some inverted hammers here and little inverted morning star style candle. That's more like an inverted doji right now. Not your morning stars that you see over here. Morning on the bottom, evening on the top. And it's, you know, coming into that 1900 to 1912 area. What did we get to on the low? 1910, very, very close, almost at the 200s. Probably going to see this tick up if this continues to carve out a low on this on the side here. 1900 to 1910 is probably going to be the area. We see the 200s coming in at 1903 and 1908 respectively, bracketing that lower second standard deviation at 1907. Below there is the lower second standard deviation on the weekly, which is typically going to be a reversal zone around support structures. So 1901, if it is lost, I'd be looking for things to fall to the upper 1800s around the wick low side structure here at around like 1880 to 1886. So funny enough, somebody had just brought up the video game, The Order, the 1886 to me today. That's weird. Sorry, that's completely anecdotal, has nothing to do with trading, but somebody was talking about it with me a little bit earlier. If gold can get back above the lower first here at around 1920 to the inverted hammer wick high, I would be looking for a pretty nice move up. And that's going to be 1930. So I would say 1925 to 1930, looking good. Of course, we need to see it start closing back above 1920, then take that lower first area at around 1920 to 1930 at this wick high. And then I would raise my targets pretty significantly to this close open structure and high side area just beneath the basis band there, coming in at 1942 to 1946. So gold also looking for a turn on momentum, and that is going to be at 1925. So it doesn't look like it's going to be happening today, but we likely see this update to somewhere around striking distance for price coming into Monday. So worth keeping an eye on. Now, do note that on the weekly with gold, it's at the lower second standard deviations. This kind of a look does tell me this is probably going to bounce pretty soon, even if it's going to be bearish. That is a lower high. Could it be a lower low on a close? Absolutely. Looking like it will. But as long as it's above this last wick at 1893 on the weekly, or even if it does throw in a close under there, I would be looking for a pretty aggressive bounce off of this, even if it stays below the basis band at that 1963 on the weekly. I'd be looking for some more aggressive bounces coming up pretty soon. Might take a little while to play out while Dixie's, it might coincide with a Dixie reversal off of some of those overhead resistance areas, and then maybe gold will reverse off of some of these supports, at least in the short term, and then we come back and evaluate it after. Now, when looking at bonds, we've got Dixie. Okay, so we've done everything that I wanted to do. Bitcoin, traditional markets, Dixie, gold, and we can take a look at some bonds here. So let's go ahead and take a look at the 2-year. We're going to take a look at yield here. So much as I had mentioned the last time that we spoke of this, I had said that I thought it was going to run back to the highs, and it has post FOMC meeting. And what I'm seeing here is the potential for this to become very long-term overhead resistance if it fails to break the 5.085% high. Did swing it to 5.11. 8% on yield, and we can see that the weekly upper second standard deviation is coming right in over this long-term spike high at that 5.28, 5.25 on a close, I believe, from 07-08. So this does look like it's setting up for a reversal structure as well. If it can regain 4.95, we're going to see the highs ran again around the around the local wick at 5.11 to that 5.25 5.2 to 5.25 area, and maybe even swing that macro high area. But it's looking a little tired, I believe, on momentum. That doesn't mean that it can't continue up while momentum is turned against. This is 5.01. It will cross back up on closures above there. So it is currently trading below there at that 4.89. So this will be pressured down. If it does lose, being above the upper first opens up the highs at 5 and 5.11 to that 5.2 at the upper second, which is also the upper second on the weekly, and a swing of that area. If it does lose this area at 4.85, I'd be looking back to the basis band around this little stutter step order block area in the 4.6 to 4.5 area. So 4.5% to 4.6%. There's a little gap over here that was filled as well. But I'd basically be looking for it to head down if it cannot do anything more than swing those highs. It's got to break them convincingly to keep heading up. The 10-year is worth looking at because the 10-year is accelerating to the upside and testing its upper second standard deviation. But I do want you to note, no, actually, this is a mean reversion move. This could get rejected pretty harshly. This is a longer term support or resistance that it just broke above again. And it's got, let's see, one second here while I set this up. So 4.22%, sitting at 4.16% right now. This, if it closes above the upper second, there's no guarantee that it's going to continue to run because there is overhead resistance right here. But if it does close above there and then close above the local resistance, and especially 4.33% at that wick high, I'd be looking for continuation. And that continuation would be to around 4.5 or so, maybe higher over time to that 5% area. So, this would tell me that it wants to play a little catch up to the 2-year yield while the 2-year kind of takes a break. But we'll have to see what happens with some of the upcoming rate decisions as well, as that's going to pretty massively influence this. Now, we have seen, it's still running like a full basis point behind the Fed funds rate. So playing catch up to the Fed funds rate, it's going to happen either where yield catches up to the Fed funds rate or the Fed funds rate begins heading down towards yield. And that's where we would start to see some easing from the Fed. So that would be reduction in rates. And that likely means that something is breaking pretty bad in the background. So it doesn't seem as though the market, traditional markets care lately though. 4.17, this is going to stay up. Looks fine. We're talking weeklies here, by the way. I'm not talking dailies. It's worth looking at the weeklies because they're going to tell you the implication for further upside when it's coming to the 10-year. As for the daily's turned against 4.11. We're looking at the same kind of thing from the daily perspective that we are seeing on the 2-year, which is we might see another drive to the top side if it can break through the overhead resistance at the upper second. Then we're looking at continuation. That's 4.21%. But it's got to beat out this last high and close above that upper second standard deviation to get that move up. That would still be above this upper second on the weekly. And then we'd be looking for implied continuation to new highs. If it does start closing back below, it's at least going to try. I can tell you that. If it starts closing back below the upper first, though, at 4.09%, I'd be looking for a run back to this low around the basis at that 4% to 3.95 or so. Gauge it from there. That's where the upper first is also coming in, and a little bit of a order block zone down here as well. So something to pay attention to because this is going to be indicative of direction for most likely, gold, Dixie, and, an indication of how tough it's going to get out there, as well as people are going to be, there's bond sell-offs for liquidity right now. People need, they need liquidity. So bond sell-offs, yield rises. So keep in mind that is an inverted relationship. Yield goes up when bonds are being sold for liquidity. Yield goes down when bonds are being bought for yield. So keep that in mind. And I will do just a very short Q&A here. We'll go back to, I'm already on Bitcoin. Let's go to the support resistance chart here for Bitcoin. And I will do a little Q&A. I'm not going to do TA, but I'll see if you guys have any questions about any of this or comments, and or things related to the market. Go ahead and let me know. Let's go and look at this 15-minute around the support resistance area or zone that we've been talking about for quite a while. Deviate below, move through, deviate above, try to find support, lost it, found it as resistance, tried the top side of it, lost it. Let's see what happens now. Might even be looking at a 29.4 test. This little consolidation structure is going to hold things down. That wick high at about 29.4, or the upper first. It's above the upper first, actually. So, and momentum's looking like a bearish reset right now for the 15-minute, but that's all going to be in relation to this 4-hour, which might be turning. This is actually something to pay attention to. 4 hours going to turn above, get an initial cross up rather on any closes above 29,285. See if that matches this BA reverse Stoke indicator as well. They're usually within a couple bucks of each other. Yes, 29.3 we'll call it. Above 29.3. We're likely to see the 4-hour turn at close of day today. Or I'm sorry, that would be, we could even see a confirmed close cross today. So this will be at 1 o'clock my time on the, so this next 4-hour close coming in about 20 minutes, a little less than 20 minutes, closes above 29.3. We're going to see an initial cross up on the 4-hour after a test into the lower second standard deviation of the Bollinger Bands. If it does regain basically that 200 EMA, we might see another drive back up to the 29.56 area. So before close of day, we could see a potential cross back to the upside for the 4-hour. So I would keep an eye on that, and then kind of go from there. Let me go ahead and jump over into chats here. Jimmy, do they have any questions? I know you're aggregating questions. They're all for very specific stuff. Okay, then I'll after I end the stream publicly, then I'll address some of those then, if they're very specific questions to your use cases. Is that what you mean? Yeah. Okay, cool. So let me then jump over to YouTube, see if you guys have any questions. Give me a second. We're going to turn the music up here. And while I read through some of your questions, let's see if I have any. Let's go ahead and get this music turned up a little bit here. So we got something going on in the background. Okay, so I do see you guys chatting over here. Bobby. Okay, so Spin, Ivan, Dr. Pepper, nice to see you finally. It's been a while. Jedi, Bobby, and Jedi talking amongst themselves, I believe. Talking about audio. Hi, Cheryl. notification. Cheryl says hi to people. Let's see. Ivan has a question on Femex. Bigger, better, or small? Place orders, post position. Fees are relative to your trade size, so it doesn't matter what size. Your fees are going to scale with the size of your trade. Smaller trades, smaller fees. If you're paying funding fees, it depends on which position you're in, and funding fees are positive or negative. If they're positive, you're going to be paying on longs. If they're negative, you're going to be paying if you're short. Which means that if you're long and they're negative, then you're being paid to hold a position. And if you're short and funding is positive, then you're being paid the fees. If you're doing live trades, Ivan, because I do know you're newer, I would tell you not to. I'd tell you to practice trade first. And you should be doing smaller trades with lower leverage or very little leverage while you are starting out. Not financial advice, but that's just a good way to manage learning the exchange as well. Okay, did I do Sol? Not doing alts today. I'm sorry, Cheryl. Did I promise you I was going to do an alt last stream? I can look at Sol if you like. I'll do one alt because I do think I told Cheryl specifically at some point that I was going to look at that for her. Dixie needs to go down, in my opinion. Yeah. Let's see. Femex is fine. I mean, it's a centralized exchange, just so you know. I would not, you don't trust any centralized exchange. Not your keys, not your coin. So always be careful. But so far, if you're looking to trade, they do well with their executions. Depends on how large your trades are going to be. But I've noticed that there can be some slippage on lower liquidity coins, but not, they've been pretty good lately with that. So let's see if Femex does have an option for loan your coin on margin trades. Yeah, it's a little advanced for him, bud. He needs the basics. If he's going to be, and you need to be mock trading, not trading with your own money, dude. If you're going to, you got to learn how the exchange works, that kind of stuff. You mock trade it so that you understand their system and then move on to the other stuff. Okay. Nice, thanks, 90. Yeah, I'll go ahead and take a look at Sol for you, Cheryl, because I have the other chat over here telling me that I did tell you last. I'd said something about one of the streams not too long ago that I'd look at Sol and I didn't get to it or something. So I will go ahead and do that. Can I talk about API 3? I don't know what API 3 is. What you're referring to? Is that a coin? So I have a question, but can you host it on Discord as well? Could you zoom back out a bit, show where your support and resistance zones come from on the daily, weekly, mainly? Bobby, what, the Bitcoin chart? Let me know, bud. I can post, you're looking for the, like a clean chart of the support and resistance zones? Like this? Is that what you're talking about? I mean, there's more here that I have not marked because I'm just marking it as I go. But let me know if that's what you're looking for, Bobby. I can post that. Yeah. If that's what you're looking for. Just let me know what you're looking for and I'll post it. I'm assuming you want to share it with some of your group. And I have no problem doing that. It's kind of a mess though. I've got daily, I've got mainly monthly and weeklies marked on this Bitcoin in 60 seconds chart. But as price moves, I'll add the dailies and so on and so forth. Usually as they're lining up with the bands either on the weekly or the daily. So when I start adding those back in. I do think that one of the reasons why YouTube Shorts don't get recommended anymore is because when they're looking through, you know, when the algorithm's looking through the video feed, it's probably a mess. So it's like, I don't, yeah. Okay, so yeah, Bitcoin, yes. I don't know what API 3 is. Is that a coin? Yeah, basically from your 60-second chart. Okay, cool. Yeah, I can do that for you, Bobby. Let's go ahead and take a look at Soul for Cheryl. This is going to be the only coin I do today, guys. I'm sorry. Getting close to my time here. If you have any other questions while I'm doing this, while I'm taking a look at this, go ahead and get them in there. All right. Was I looking at Coinbase? I mean, I was pointing this out the last time. I'm assuming that that's not the chart that I was marking up, though. Yeah. All right, so let's go through and let me just look at the different Soul charts that I got here. So I've only got the two. And yeah, we're going to use the Coinbase one. Spot's king. So let's go ahead and take a look at this 4 hour. Nope. Let's look at the daily and then we'll look at a few other time frames. All right. So it's Soul kind of already kind of headed down. Got its initial bounce off of the 200s here after a nice move up. So we've already charted this part. You know, it's kind of struggling around the upper first standard deviation. It's got, you know, lower low, higher low, lower low structure here. It's not going to put in a high realistically until it starts closing back below this 2420. So if it closes below 2420, that's going to put in a high, but it realistically needs to drop the wick, just coming in at 24. Call it 24 bucks. Below 24 bucks, it's going to put in a high, probably run that basis band and lower. It's below the weekly, which is at 24, lower first. Yeah, so if it drops 24 bucks, it's got a chance to hold around, you know, mid 23s. Now, there is an order block candle right here around 23.72. High side's coming in at 24. If it drops that area, 23.72, two of these wicks over here at around 23.50. If it cannot hold the high side wicks, which is the lows from this little move down, then I'd be looking for the lower first at 23 bucks to get tagged again, and possibly even a run back to the 200, which is coming in at 22 and a half, a little bit above 22 and a half at 22.66. So is it dire? No, not really. 22.93 by close of day today. We'll keep it turned to the upside. It's probably going to start creeping into the $23 area for the momentum pivot on the daily. So let's go ahead and look at the 2-day, a little bit longer term. Swung that basis, sitting on top of the 200 simple moving average, right around the weekly upper first, and above the basis on the 2-day. So I would still be looking, you know, if it's going to take out this high at 25 bucks, then we're looking at 25.17 on a close open. You want to see it beat that as well. And if it can get above there, it's up to the wicks at around 25.50 to 25.67 here. And I would even be targeting the upper first on the 2-day, which is around 26 bucks. If it drops the 200s, basis is the 200, I should say, the 200 EMA. Upper first on the weekly, basis is coming in at 24 bucks. If it can't hold that $24 area, it's going to put in a high in the daily and likely head down for support around that 23 to 23.50. Loses that, it's right back to the lows at 22.5 and 22 bucks. Now the 2-day is getting ready to turn up, and now that this is going to be closing with Saturday's candle, so 24.11 is the current pivot. If it can turn and close above 24.11, which it's currently trading, you know, 30 cents above at the moment, then I'd be looking for an initial cross on the 2-day, continuation on the daily. 12-hour though is going to give me pause. 24.74 is the number to keep that turn to the upside here. We're seeing a very tight consolidation on the 4-hour. 24.74 is the same number as the 12-hour. This consolidation is hanging on to the 200 simple. If it does expand, the 200 EMAs cutting right across this low breakout structure. So we've actually got 24 bucks. That's this high. Reclaim of this high. Bearish reclaim of this high would be right back to the lows around the 200, which is at 23.40. Likely to update to around 23.50. So we have confluence across all these time frames. That'd be closures below the lower second as well at 24 bucks on the 4-hour. So be aware of that. Above, you know, the upper first and second, then we're looking at 24 to 25 bucks. I'd imagine this runs for the highs at 25.5 to 25.67, 70 area, and then possibly 26 bucks over time. Stoke will turn back up, of course, above 24.75. Right now it's headed down. See hourly looking like. Hourly's headed down as well below 24.66. So, you know, if it can reverse off the lower second and maintain this low side structure, again, above 24 bucks. If it can consolidate up here, and right around this high side structure that it's holding support on, right here, this high, this low, 200s, 23.94 on the hourly, then it's, you know, then come back to it and see where it's at. As it's likely that it could then try to get some continuation to the upside. Loses it, it's over. So that's it though. I'm sorry guys. I'm only going to do that one because I did tell her that I was going to look at Sol a few times now. I see that some people have just joined. I am wrapping the stream up. You're welcome, Spen. Hi Bubba, how are you doing, buddy? I'm always wrapping my stream up when you're headed in. Do apologize. I will be. I got to find a good way to get everybody's times down, and I'll try to find some equilibrium because there's people here from all over the world that do watch this, and then there's people in my time zone in the other stream that can't, you know, chat on YouTube because of IP restrictions because they're at work. Hi Sam, how are you? But I will, of course, be doing a stream on Monday. It's probably going to be, you know, 11:30, 12 o'clock Pacific Standard Time, which is your 6:30 to 7 o'clock UTC. Or if you're on the East Coast, it's 3 o'clock. 2:30 to 3 o'clock on the East Coast for the Friday streams and Monday streams and Wednesday streams, actually. Mainly because of when I have to go pick up my my son from school, and I got a few other errands that I got to run before then. So, but I'm glad to see everybody here. Of course, you can just play back. Go ahead and rewind the stream. The DVR function is enabled, so even when I am streaming, if you just want to go back to the beginning and play catch up, first 10 to 15 minutes are going to be starting soon, and music, and then the last part is going to be me talking to you guys with a little bit of background music after the initial analysis is finished, and then the end screen with a little bit of music for those that want to hang out and chat in the chats here. So, hey, you're welcome. Thank you. I do appreciate you guys as well. Thanks, Sam. Thanks, Baba, Spin, Ivan, Bobby, Cheryl. I do appreciate you all. Jedi, you as well. Mr. No Name was in here for a moment. I don't know if he's still here. Thank you for joining. And then Ivan and Spin, I hope I didn't miss you. And Mr. Dr. Pepper, I know that you are no longer in the stream, but I know you got to catch up. All right. So with that, I will wish you all a wonderful weekend. And then, of course, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. Again, have a great weekend. And with all of that said, Landy out, and go ahead and enjoy some of the ending music.